Welcome you all. Greetings to wherever you are. Thank you very much for tuning in. Today we are going to discuss everything that you need to know about the trial balance. And I shall going to illustrate with a worked example for you to have a deeper understanding of how to prepare the trial balance and how to correct some errors. So this video is related to those people who are within the operational, managerial, and strategic levels. As the trial balance, it forms the basis of any management and financial reports that you can think of. So this is one of the fundamental aspects of the business processes that you need to understand as the SMEs, as the business owner or the shareholder, right? Whatever financial decisions that you need to make based on the information that you have at hand, it needs to emanate from the information which passed through the trial balance. So we now need to understand more about the trial balance. And if you are with me through to the end, you shall going to benefit a lot in less than 45 minutes. My name is Samuel from Chinaki Global Bookkeeping and Trainings. And I'm actually someone who has been in the industry dealing with accounting and finance in various roles. And I have more than a decade worth of accounting related experiences. And I'm also a certified zero accounting advisor assisting SMEs and any other business organizations who need to use zero. We can set up them the accounting software for you. We can do the bookkeeping, or we can also assist with any consultations that you need regarding bookkeeping and the trainings. Let's quickly have a look on the outlook on what we want to look at. All right, as I've highlighted, that is everything about trial balance. All right, so the first aspect that I want to look at is to understand the definition of the trial balance and how it differs from other reports that you can think of, and also from other aspects of the bookkeeping and accounting cycles. All right, and we shall also look on the purposes why we are going to prepare the trial balance, and including with the features that are supposed to include in a trial balance. And we shall also have a look on the illustrations and different types of errors, those which can be detected by the trial balance and those which cannot be detected by the trial balance, and also how we can resolve any errors related to the trial balance, right? We shall go into the basic steps that you need to follow, though there will be no any formula to solve any errors related to the trial balance. So on the first part, we want to define a trial balance, right? A trial balance is just the list of the closing balances that we take from the closing ledger accounts, right? These are just the closing balances that we take from the ledger accounts, and we prepare them on the list of statements. So this statement is called a trial balance. So basically, a trial balance is just a statement showing a list of balances that we've collected from the ledger accounts. It's not a ledger account. It's not a financial statement, right? It's not something which is prepared using a double entry. It's just a statement, right, with the list of ledger accounts balances. Okay, so let us know how and why we are interested in the trial balance. So let's start with the purposes of the trial balance. Okay, we prepare the trial balance with intention of checking the arithmetic accuracy of our debits and credits that we have recorded in the general ledgers, right? And sometimes if we prepare the trial balance, some of the users, like auditors, the managers, they rely on the trial balance. So we prepare the trial balance with intention of making sure that we form the basis of further financial statements that we might need to prepare. Okay, right? And we can also prepare the trial balance to as a way of reconciling our general ledgers, right? We want to make sure that we have recorded everything correctly. So a trial balance is supposed to balance. It has a debit and credit. So both columns, debit and credit, must be equal, right? However, if the trial balance has got equal totals, it doesn't necessarily mean that it is always correct, right? We shall going to see when we are talking about other areas which do not affect the trial balance. Okay, right? We also prepare the trial balance so that we can able to prevent errors in the financial statements. If we are able to prevent errors, that is when we'll be able to end up with the accurate financial statements, accurate management reports that we are preparing from the information we have listed in the trial balance, right? Then we also prepare the trial balance as a way of indicating some comparisons, right, of our ledger balances. Okay, we can prepare the trial balance for one period and we compare the totals with the next period, right? By so doing, we are just trying to have a more or less a glance of our ledger balances at a specific date or at a specific point of time, right? So we prepare the what? The trial balance. Okay. Then the other thing, we also prepare the trial balance so that we can give it to the auditors, right? They use it for checking the tracking records of general ledgers, right? So it is very fundamental to have the trial balance if you need to invite the auditors or if you need to prepare the management reports or the financial statements. Okay, right? So a trial balance, it has got some characteristics. So let's have a look on different characteristics that we can use to describe a trial balance. Okay, so a trial balance is just a statement. It's not a ledger account. It's not a financial statement, right? Okay, it has it normally has 4 columns, 1 column for codes or the folio numbers, right, which shows the reference of the transaction. It also has the another column which indicates the description of the figures, and these are normally the names of the ledger account where we have collected the ledger balances from, right? It also has the debit column and also the credit column. Okay, right? Then you need to understand that it is actually prepared at a specific date, right? It's not prepared for a certain period of time, let's say for the whole month or for the whole week or for the whole year. It's only for a specific point or a specific date, right? Be it the beginning date of the month or the end of the month or end of the week or end of the year. We can prepare our trial balance whenever we need to prepare it, and whenever we need to make any decisions which is related to the financial statements or the management reports, we need to prepare the trial balance. But under normal circumstances, we normally prepare the trial balances on the monthly basis. That is when we do all the due diligence to check whatever which needs to be checked before we prepare our financial statements, right? Okay. And also sometimes when we are budgeting as well, we also prepare the financial statement. So it can be prepared at any date, depending with the reasons why we are preparing the trial balance. Okay, right? Then the other thing that also needs to have a look at is that the credit and debit columns, right? They're supposed to agree in their totals. So the totals of the credit and debit needs to agree, needs to match. Okay, right? And also the narration that we have in the trial balance is supposed to represent the ledger accounts where we have collected the names from, right? The names and also the ledger balances. Okay, right. So let's quickly have a look on the trial balance, how a trial balance is prepared. So I've just collected some figures from the ledger balances. Okay, right. So we have the figures that we have collected from the ledger balances, and let's just assume that these are the closing balances that we have, or the specific balances that we have as at 30th of April 2023, right? Okay, so this is just a list of figures. So we have the code that we can also refer as the folio number, right? Okay, or the reference. Okay, then the name of account. This is the descriptions. All the figures that we have, right? We took them from the specific general ledger account, right? A ledger account for the capital, a ledger account for the advertisement, a ledger account for the rent outstanding, a ledger account for the accounts payables. Okay, right. So let's now see how we're supposed to prepare the trial balance. Okay, so whenever we are preparing the trial balance, the first understanding that's supposed to have is you need to know what items are supposed to go on the debit side of the trial balance, what items are supposed to go on the credit side of the trial balance. Okay, right. So all the assets, right? If there's any balance related to the assets, they're supposed to be debited, right? So they're supposed to go on the debit side of the trial balance. If there are any items related to the expenses, they're also supposed to go to the debit side, right? If there's any balance related to the drawings, it is also supposed to go to the debit side of the trial balance. If there's any balance related to the capital, it needs to go to the credit side. If there is any balance related to the liabilities, be it short term or long term, must go to the credit side. Okay, right? If there are reserves, okay, if there are reserves, they're supposed to go to the credit side as well. Reserves, it's also part of the equity or capital of the companies. Okay, so let's quickly have a look on how it's going to be looks like. So after putting the list of balances from the ledger accounts into a statement called a trial balance, we'll come up with something like this one. Okay, right? So we have our debt, which is actually saying the trial balance of Sembo PVT Ltd is at 30th of April 2023. So it's for specific date. These are the balances as at 30th, right? It can happen that on the 29th of April or on the 1st of May, the balances that we have in the individual ledger accounts will not be reflecting the same balances that we have on the 30th of April. So that's why a trial balance is just a list of balances as at a given date. Okay, right? So the first line item that we have is capital. A capital is a money contributed by the owners of the business, right? So it's supposed to go to the credit side. Okay, so that's why it is on the credit side. An advertisement is an expense, so it needs to go to the what? It needs to go to the debit side. But don't be mistaken with certain organizations who are advertising on behalf of other companies, which means their main service delivery is doing the advertisement. So whatever they are charging on advertisement, it is going to be part of the sales revenue. Okay. But in this case, what we are talking about a specific company that we have, right? Though the trading activities or the nature of the trading activities is not indicated, right? The advertisement figure that we have here is for the expenses because we already have sales down here, right? Okay, so this is the expense, 14,000 needs to be debited. Then rent is an expense, it needs to be debited. But here is saying rent outstanding. It means we have already incurred some rentals. We have some rentals which are due, right? But not yet paid. So it is the expense that we have. Okay, then accounts payables. This includes the suppliers balance, right? That is supposed to pay when it falls due, right? Maybe it is already due, but it is still outstanding, right? We received some services or goods on credit worth 2,000. So this is a short-term liability. Okay. Accounts receivables. This is the balance that we have with our debtors. So this is part of the current asset. It's a short-term asset that we have. So we need to debit. The drawings, it could be of goods or cash collected from the business by the owners, right? So needs to be debited. The purchases, these are the value of goods that we bought with intention of reselling them, right? So this must be debited. Okay, it's part of the cost of sales. Okay, then sales needs to be credited. This is the revenues, right? Then the discount allowed is an expense, right? Allowed a discount, or we have offered a discount to our customers, so it's an expense to the business. Needs to fall under the debit column. Then discount received, we've received the discount from our suppliers. We need to credit this. Land and building, this is a fixed part of the fixed asset, and we need to debit it, right? So after crediting what must be credited, debiting what must be debited within our trial balance, we come up with our totals, and our total must agree if we have done everything correctly, right? But even though we have done everything correctly and we have our equal totals, we still need to do other due diligences, other reconciliations to check if there are any errors which are not detected by trial balance, right? So we shall look into that. Okay, right? So let's quickly have a look on the errors which can be detected by the trial balance. Okay, so when you're saying errors which can be detected by the trial balance, we are looking at those errors that we can able to see in the trial balance, right? They can be revealed by the trial balance, right? Our trial balance will not be able to balance, right? We're not going to balance if we have any one of such errors, and this may include transpositional errors, right? When I'm saying transpositional errors is when we have collected our closing balance from the ledger account, right? Then when recording the figure in our trial balance, instead of recording it either on the debit side, we may end up recording on the credit side, or else we, instead of recording the figure as maybe 1,000, this is the figure that we have collected from the ledger account as the closing balance, right? Assuming that it is 1,000, right? instead of recording 1,000, we mistakenly record 100. Okay, on the credit side, using the correct narration, but the figure is wrong, right? We have made a mistake. Okay, right? Okay, so it's either we have understated or overstated our figures. Okay, right? This can also cause a trial balance not to balance. Or sometimes we might have a single entry, incomplete double entry. Remember in my previous video, I have mentioned out that when you are completing the double entry, there's a side which is giving, also another side which is receiving, right? The side, it could be an account A, then another account B, it also needs to receive. Okay, right? For instance, if we pay rent of 5,000, okay, using bank, right? It means that we are reducing our cash in bank, right? So the bank is giving out money, okay, right? And the one who is receiving this cash is going to receiving cash and increase assets in their books, okay, right? So it means in our books, if we paid a rent using bank, we need to credit our what? Our bank account, right? Okay, and if this was just a cash payment, there was no credit or any outstanding amount, right? We also need to record in the rent account, right? We debit rent, we credit bank. Okay, right? So if it is now a single entry, it means that we haven't completed the double entry. We have only either recorded the amount in the rent account only, and we forgot to record the same amount in the bank, or we have recorded the amount in the bank account and we forgot to record the amount in the rent. In this context, we end up having a single entry, which may cause our trial balance not to balance. Okay, right? Or else, sometimes we might also copy the wrong figure from the ledger accounts, because we have made a wrong mistake when we were totaling or sum up the ledger balances, right? And we have made an incorrect closing ledger balance, right? By so doing, we are also going to repeat the same mistake in the what? In the trial balance. Okay, so our trial balance is not going to balance. Okay, it is also possible that we might take the closing balances, right, from what? From the ledger accounts. Okay, and record the one figure twice in the trial balance. We just recorded the same figure, recorded twice in the trial balance, right? Be it on the wrong side or maybe on the right side. Okay, it can also causes the trial balance not to balance. So in essence, the trial balance may not going to balance if we have a single entry or an understatement or overstatement of balances that we have in the ledger, in the trial balance, as a result of mistakes in the ledger, or as a result of mistakes of incomplete double entry when we initiated the transactions in our records, or else by just a mere of not summing up our debit and column totals of our trial balance correctly, right? This may cause our trial balance not to balance. Okay, right? So sometimes we might also have certain errors that might also occur within our business, and these errors cannot be revealed or detected by the trial balance. Okay, right? We have 7 types. Other people, they normally say 6 times, 6 types, but they can add up to 7 different types of errors, right? Which cannot be revealed by the trial balance. Okay, right? So the first one is errors of original entries, right? If we complete the double entry, right, using incorrect figure, for instance, paid rent of 1,000, right? The transaction was recorded as 100, right, in both accounts. Okay, so which means in the rent we have recorded 100, in the bank we have recorded 100, but the actual amount that we have credited from the bank account is 1,000, right? Our trial balance is still going to balance, right? But with the wrong information, with the wrong figure for the rental balances, with the wrong figure for the bank balances. Okay, right? It is because we have made a mistake when we initiated the transactions in our records. Okay, and this mistake cannot be detected by the trial balance, right? Errors of commission. When we are saying errors of commission, we are saying we have classes of transactions that we have, right? We can classify our records or our business transactions into assets, into a class of liabilities, in the class of expenses, in the classes of equity, right? In the class of revenues, right? So each and every class, we have different types of what? Of accounts that we have, right? For instance, in the class of assets, right? If we have long-term assets, this may include a motor vehicle, land and buildings, the assets that we are expecting to use over a long period of time. These are long-term assets, right? And any increase in assets, right? It needs to be recorded in assets, right? Any decrease in assets, it also needs to be recorded in assets, right? And other entries needs to be recorded somewhere else, right? So when we are saying errors of commission, we are now saying we have made a mistake, right? Within a same class of accounts, right? We have recorded in the wrong account, but within the same class of accounts, okay? For instance, a purchase of motor vehicle was recorded in the what? In the land and buildings. Land and buildings, they are within the same class, the fixed asset class of the accounts, but it's only the wrong account which was recorded, right? It means that the debit entry was entered in the correct what? In the correct side. It can still cause our trial balance to balance, but we have a mistake in what? In the land and building and also in the motor vehicle balances that we have used to prepare our trial balance. Okay, so this is an error of commission, right? Then we also have an error of omission. This is when we have completely omitted a transaction from our books, right? Our trial balance is still going to balance, right? But we have completely omitted the double entry and the credit entry, okay, right? Then we also have what we call an error of principle, okay? Error of principle is when an item has been posted to the wrong class, right, in the wrong account. For instance, we have a class of assets. We also have a class of expenses. If an asset has been recorded in the class of expenses, it is called an error of principle, right? Right? For instance, a motor vehicle, the purchase of a new motor vehicle was recorded in the motor expenses account. Are you getting it? We have made a mistake of recording a capital expenditure, right? An asset was recorded in the expense. So this is a wrong class, okay? Right? And also a wrong account. This is an error of principle. Then we also have a complete reversals of entries. When you're saying a complete reversals of entry, this is when we have just did the opposite of what we were supposed to do when completing the double entry, right? A purchase of motor vehicle by check, right? We were supposed to debit the motor vehicle and credit the bank, but we have done the opposite. We have debit the bank. It now seems as if the bank was receiving money. Then we credit the motor vehicle. It now seems as if we have sold the motor vehicle, yet we have purchased a new motor vehicle. So if we complete a double entry in that way, it is called a complete reversals of entry, right? So our trial balance is still going to balance, but with the wrong total figures, okay, right? Then the other one is the compensating errors. A compensating error, this is when the net effect of two or more errors has caused a balance of zero, right? Which may cause our trial balance to balance. If we have made an error 1, then and also an error 2, for instance, right? Both of the errors may set off each other, right? Our trial balance is still going to balance. For instance, a motor vehicle account was overstated by 1,000. Then stationary account was understated by 1,000, right? An account with an overstatement of 1,000 and an account with an understatement of 1,000. Stationary is an expense. Asset, a motor vehicle is an asset. Both they carry debit balance, so they will be on the debit side of the trial balance. So on the debit side of the trial balance, we are going to have an item with overstated balance by 1,000 and also with another one with an understated balance of 1,000. So the net effect will set off each other, will be zero, right? So in this context, our trial balance is still going to is still going to balance, right? Duplication error. It is also possible that we can make the double entry of one business activity or one transaction twice, right? Especially in a situation where we don't have the segregation of duties, and the employee one can come and do the double entry, right? Then another person can also post, or else the same person can do that mistake, right? Can post the one transaction twice by mistake. Our trial balance is still going to balance, but with incorrect amounts. Okay. So as the business owner, as the manager, as the financial report user, or whoever who is working with the figures of the reporting entity, you need to know different types of errors which can affect the trial balance, and those errors which cannot affect the trial balance. This can also assist you not to just make a conclusion based on what you are seeing in the trial balance, right? As management accountants, we don't just make conclusions on the trial balance. We need to go deeper into the individual accounts so that we have a clear understanding, right? Same applies with the auditors, right? They also need to trace down in the GL and confirm the balances they are seeing in the trial balance, if they are matching with the supporting documents, if they are matching with the amounts recorded in the GL, in the general ledgers, right? Okay, right. So let's now have a look on how we can resolve these errors. Okay, we now need to know how we can resolve these errors. Okay, so there is no like a stipulated formula that you can follow. It just depends with the type of bookkeeping you are using. Are you using manual? Are you using an accounting software to do that, or else, right? But whatever the method you are using, you need to know the procedure of how to identify errors, or how to confirm the balances that you are seeing in the trial balance, if they are making sense, right? Okay. So first of all, you need to know two different types of errors, right? In order for you to resolve any errors or to check for any errors, you need to know those errors which affect the trial balance, and also those errors which do not affect the trial balance, right? Okay. So you need to make sure that after knowing that, you can also try to check, to double check the totals again, to recalculate the totals in the trial balance to see if they are agreed, right? And you also need to make sure that you have done the count record. Okay, you just count the number of transactions that you have in the in the trial balance. Okay, you just need to count and see if they match with the number of totals that you have collected from GL, right? If they matches, it means you have recorded everything. If they disagree, it means you have either omitted or you have duplicated a certain figure, right? Or the other thing that you can also do is you also need to take your current trial balance you have just prepared, you compare it with the previous trial balance, just to check the reasonability of the figures you have in your records. Okay, right? Then you can also verify the ledger accounts. So when you're saying verify the ledger accounts, it means you can recalculate the totals, right? You can recalculate the totals of the ledger balances that you have. Okay, right? Or you can even double check if the closing balances in your ledger balances, are they confirming with what you have recorded in your trial balance or not? Okay, you can also check for the entries in your trial balance. You need to know that a closing balance at a given date, right, is not supposed to be recorded in the trial balance. So the figure, in a closing stock balances. So the stock figure that we are going to see in the trial balance is only for the opening balance. Okay, right? If it is for the unadjusted trial balance. Okay, then you also need to do the adjusting entries, right, to the trial balance for you to make sure that you have recorded everything in your trial balance, right? Okay. So in doing this, you need to make sure that you know certain ways that you're supposed to use to identify errors within your trial balance. Okay, right? Then you also need to know, let's say you have identified a certain error. You now need to know, okay, how this error came about. Okay, right? And you also need to answer the question, what was supposed to be the correct entry, right? Okay, so given the type of error, you now need to make sure that you know how to correct the errors. So first of all, you need to prepare what we call journal entries for every error, right? So that you are not going to miss anything. You need to prepare the journal entries. So when completing the journal entries, you need to identify if the error was involving one of those 7 errors that I have mentioned out. Those errors which cannot be detected by the trial balance. If it is one of those ones, you need to complete the double entry, right? Okay. But if it is an understating or single entry or the transposition error, right, of copying the wrong balance from the general ledger to the trial balance, right, with that one we need to correct with what we call a suspense, right? A suspense is just the balancing account that we record any difference as per trial balance, right, and all the errors that we have, right, that we have identified. Okay, so it's just a reconciliation account that we prepare so that we can able to correct the errors. And if we have our difference as per trial balance and identify all the errors and record them correctly, those errors which are not supposed to be recorded through the suspense account are not in the suspense account, and those errors which must be recorded through the suspense account are recorded in the suspense account, then our suspense account must balance. Okay, so once our suspense account has balanced, it means we have identified all the errors and we have corrected them correctly, and we can now prepare the updated trial balance after correcting the errors. Okay, right? So having that in mind, we are now able to know more or less what we're supposed to do when we are identifying errors, and also preparing the journals for the purpose of correcting the errors, and also draw up the suspense account, which must balance, and it's supposed to start with the difference as per trial balance, right? Then we update our trial balance. Okay, right? So having that in mind, it means we are now in a position of understanding a bit about the trial balance. Okay, right? So in a nutshell, we have discussed about the trial balance, and we mentioned about the definition of the trial balance, and we also looked at the types of trial balance. We discussed about types of trial balance in the previous video, and if you missed that one, you can go and watch that one. There are 3 types of trial balance, which is the unadjusted trial balance, and also adjusted trial balance, and the post closing trial balance. Okay, all right. Then we also discussed about the purpose of the trial balance, then the features of the trial balance, illustrations, we've done the illustrations, and errors which affect and errors which do not affect the trial balance, right? And also how to resolve these errors in the trial balance. Okay, so remember to subscribe this channel for more related videos, right? And you are going to be notified once you have subscribed. Okay, right? So this is basics of the trial balance. And if you need to know more, or if you have any specific questions related to the trial balance, my email address is there, my WhatsApp number is there. You can reach us, and we'll be able to discuss. Okay, right? So thank you.